Pickleonia.
Okay, that thing's just too fucking long. What's up, everyone? How you guys doing this morning? Dana, welcome to Cornishon. Thank you so much. Here you got the dope data and analysis. Welcome back from the shadow ban realm, Batbones. It's good to hear the sweet caress of your voice in text. Intro cut short, bullish. Well, I gotta sit there and wait on it sometimes too, right? Hope you're rested. Unbelievable you're awake at 3 a.m. and then again at 9 a.m. Oh man, I was up till 5. Good evening, Mr. Pickle. Do you think all the meme stocks will run on Monday? Define all. If by all you mean all of them, no. Some of them. Some have already run, for the most part. Updates on end of week data. Let's take a look. Remember that this doesn't account for exercising. But GameStop, Gamma Max 26.25, Vega Neutral 259, Gamma Neutral 17.27, and Delta Neutral 19.36. So Delta Neutral dipping just below the price action is probably a good sign. For Upstart, Gamma Max went up a little bit, $23 now. Vega Neutral 1286, Gamma Neutral 1608, Delta Neutral 1770. Also looks very good. I don't think those Gamma Max values are perfect. And they won't be updated for, you know, exercised options probably till after market Monday, unless I can convince JFresh to run the data Monday morning, which he is reticent to do. You need to be in the Lambo today. Not yet. 2, 3, 40C, same like free money. No, not necessarily. 40's egregiously far out of the money. That's 100%, like almost 100% out of the money. With no theta? Yeah. The Nix is finally free from the stock market. I don't know. The Louvrion is back on strike. Oh, Jesus Christ. This time for real? I haven't made a stream card in like 36 hours. I'll shoot you some ideas. I just want to know 2 things. Are we running next week? And two, how are the steaks from SRF? I haven't eaten them yet, and it looks like we are. Thank you, Retrocognition. They're still deeply frozen. I haven't had time to cook anything. How many more chuggas before the choo-choo? Maybe one. I have some Upstart 590 Gen 24 calls. If we can get a hard run, what kind of IV bump could I expect on those? I'm trying to get an idea of a reasonable limit, sell targets on the way up. Thanks. You can look at the historical data on the options chart and kind of gauge that with between that and the current price. But for those contracts, it's really hard to say. I mean, you're aiming for an IV increase and a small Vega increase, right? Ideally, it would need to run with a lot of volume for you to see profits from them. It's hard to say. They're very far out on the chain. It's not IV we regularly track, so I would say the best way to do it is historic data for that contract. Um, look for periods where IV was high on Upstart and see what that contract was worth. Then, subtract, the theta decay from that period of time till now, and you should have a pretty good idea of where it can go. Obviously, Upstart on Reg Sho and potentially running both are, well, pretty compelling, right? So it could potentially run harder than it has in the past. GME, AMC, Bobby, Lucid, Tesla. Yeah. I don't know if Lucid's gonna keep running. Lucid got quite a lot of liquidity already. Um Bobby is already very liquid. AMC and GME really haven't run yet. Tesla's still running, but on bigger stocks like that, like the way short vol positions are closed out and liquidity is realized, is much slower on the big mega caps because there's a lot more underlying stock purchase and sale and far more participants, right? So it's a more efficient market, whereas like GME is extremely inefficient. Personally, I'm juiced as fuck for our face melting $3 run, right? we can go higher than that. I mean, Gamma Max is at like 26, and probably with options that were closed Friday and possible exercises maybe a little higher. I could see it being like $1 or $2 higher than where we currently have it at, but not a ton yet. I think there hasn't been a lot of call buying yet, right? So I think if we're gonna see a lot of call buying, it's probably going to begin on Monday alongside short call capitulation, which also drives up Gamma Max. So we're still waiting on that, and not all of those short call positions are closed yet. They're still hanging on a bit. When they do, and they are in the money, they will have to find some shares to buy if they don't already need to find those shares. I exercised so many Upstart calls yesterday morning. Oh shit. Nice. I fucking hate exercising. That's fair. I want to see some likes to start the day. Green names roll up. If you guys could drop a like, that's a big help. And no one ever likes the Sunday stream. I don't know why. The pores should at least like it. I let you guys in here for free. Goddamn subsidized pores. Have you tried baiting him with cat kibble? No, but I could. What did, maybe Fancy Feast. What did run on Friday as I couldn't see? Did the realization of liquidity occur on GME? No, not to any significant degree. Neither GME nor Upstart. But the trend of illiquidity reversed, which is very important. So that's a very good sign. Very small percent of option holders exercise. Do you really think it will affect the price that much? It can, yeah. Options are leveraged, and exercising of options creates a demand on the underlying, which needs to be satisfied with lit market purchases. It's difficult. You can satisfy options exercise with ETFs, but then you just create more obligations, right? Gork, I dropped nearly 5 grand on far out of the money weeklies. I close on Friday. Please make the stock run. Well, it sounds like you're doing your part to try to make it run. Why did Pigeon Teeth get timed out? What did he do? What did you think happened with Lucid last Friday? It had a pretty stacked options chain, and the market hedge, like the market maker hedge, flipped and it got a shitload of volume. Probably sympathy with Tesla driving prices up, and also there was a buyout offer. So a couple catalysts and a stacked options chain, and you get big ups. I'm actually kind of pissed about Lucid. I had shares that I forgot I had that I bought in November, when the Saudis like bought more, and now I'm like $1 above my cost basis. I could have at least sold covered calls. Oh well. Can you go over SPX and how high you think it could go as a peak? Do you think it would peak at 410 before FOMC and finally start the next leg down? I'll go over that in a little bit, yeah. I'm not gonna do SPX right up front, but I'm gonna go over SPX. There's kind of a lot going on this week, so we're definitely gonna be covering that. If chasing, would you stick to in the money calls further out than Feb 17? I probably wouldn't buy in the money if like scalping volume on Monday. I'd probably still go out of the money. I might not buy calls above like Gamma Max or yeah, but I would probably still go out of the money. Yeah, I might buy a few out above Gamma Max, but not many. Not many. I don't usually play weeklies with Jimmy. Feb 5th, 27 and 30 calls look like you can play. I know risky, but next weeklies aren't bad either. Jimmy Feb 5th. Is that? I thought it was the 10th, 3rd and 10th, right? Isn't the 5th a Sunday? I have a bunch of Bobby merger questions, but you know, it's Bobby. It's probably not merging. They filed fucking bankruptcy. They're filing bankruptcy. I had a call with over 600% in March. I can't remember how many days to expiry. Like them not selling gift cards is not bullish. Um, Over 600% in March. I can't remember how many days to expiry. I remember it because I bought it with profits, chasing even more profits. Oh yeah, I mean March had some calls that did some crazy shit. I haven't been able to watch the past couple of weeks. Do you mind having a quick recap on current thoughts and theory on the future of OPEX runs? And there's a run expected this coming week. Thank you. Yeah. Basically the current thought is that this OPEX was deferred. There's possibly a fourth trade that we were unaware of, deferred through MLK. At least the current price action makes it appear that way, which would be the window from January 7th through Feb 1st for expected covering. We'll see. We've already started to get some volume, so that's indicative of something happening. Hopefully we see more and can confirm that. And if we can, that gives us a better idea of how deferrals will fall in the future. Right now, Liquidity is normalizing. Hopefully that trend picks up velocity and continues. But right now, yeah, it looks quite good. It looks like it's gonna run a bit outside of the expected time frame, but run nonetheless. So the bad cross of the tips was probably because of the 1 day extra deferral we missed, right? Seems kind of bullish that one unexpected day like that makes GME so illiquid. Yeah, well, I mean, they started shorting after the 18th, right? You can see the trend there pretty clearly. I will say that these crossovers do line up with deferral dates, right? Like Jan 11th is a deferral date. December 21st is a deferral date. December 12th is the day that the November deferral lands on, right? Like, so these crossovers, as they attempt to contain an outbreak of implied volatility, make the deferrals very obvious, which is an interesting thing that, you know, it's not a correlation that we had before we had this data. You know, we've watched deferrals and talked about them since, you know, February of February of last year, you know, and we never had enough data to really say, okay, this can be a hypothesis, right? It was always just like, well, FINRA basically lets them do whatever the fuck they want, and so we have to target either every window or we have to target massive windows in order to catch these runs, right? And if we can confirm this and narrow the deferrals down and figure out when they're used, how they work, and how many of them are applicable to the settlement of these transactions, then we can also narrow down the amount of exposure needed to OPEX while increasing the likelihood of correctly timing them. So it's good. If we run, and we run during a period where we can, you know, define expectations, then that's very good moving forward. Also, Jamie maybe not dead, which is bittersweet, but I'm okay with it. Did Rivian run with the new EV stacks? I don't know. We could look at it. Probably. Yeah, looks like it's running. Rivian's got a lot of shorting. It's probably going to run more. Will Upstart closing the gap on Monday change your mind on the theory? On what theory? Closing what gap? Could you be more specific on all of that, Ben? Is there anything unique about Upstart ETFs that could make the price action much different than what we've seen on GME during OPEX? Yeah. Upstart ETFs have like 1/40th the amount of liquidity available in them that GME ETFs have. So if Upstart starts running and FOMO comes in, which, you know, it would have to hit the news cycle probably for that to happen, but if it did, there's really nothing to stop it. Like on GME, they can use, you know, those actively traded ETFs, you know, because as GME price runs up, it's waiting, and those it's waiting and those ETFs increases. The fuck is going on here? Hold on. Oh, you little bitch. Okay, there we go. So GME is waiting and ETFs goes up as the price goes up. So as GME runs, ETFs become more liquid. And this is true for Upstart to a degree, except Upstart's not in a lot of actively traded ETFs. Its largest ETF, bots, is only rebalanced like once a year. So its liquidity isn't going to increase significantly, at least on the ETF side as it runs, which means there's less shortable shares. And given that, the float is already sold like 30, it's like what, 37% short. There just isn't a lot of available shares anyway, right? And the borrow rate's fairly high. So we'll either see the borrow rate skyrocket in an attempt to stop the current run, or the current run will just keep going and cause short capitulation. They don't have a lot of options on Reg Sho. It'll be interesting. So if we don't get a really good run out of this, or we don't get like a big run out of this, we just kind of hit gamma max and fall back down, that will probably generate enough obligations because it's on Reg Sho that the next run will be WeBull. During Fridays, I moved my stops about 50 times on contracts. Is there a better way to set stops? Wider and then move them closer at resistances? TW here. What's up, Twat Waffle? First of all, thanks for everything. Second, in a couple weeks, can you shed a little more light on some puts you will be selling for income or long holdings you are thinking about? Sure. Right now, we're in a rising market. I don't know if that's going to continue. So I probably won't be selling a lot of longer dated CSPs at this point. If there's a turnaround in the market, I don't want to get assigned on a bunch of shit way above where I could have bought it, right? So this is traditionally not a great time to sell CSPs. Where the heck do you find VOMA? What do you think Fubo PT is this week? I don't know. It's a good question. Gamma Max has fallen below the current price of Fubo, which is usually bullish. But I don't know what the upper range for a move is. I would say $4 or $5 if it can break 3 with some volume. There's a lot of call interest, so it's got potential. The whatever runs on Fubo occur, remember that they can end really rapidly, a lot like Bobby. So don't end up bag holding. Take advantage of it if it does run. Do you think that you were close to figure out the playbook of the vol shorts? And if this becomes common knowledge, could it hinder or destroy their business plan? We might be close. Why would it become common knowledge? How are Gen 24 IC contracts as a player that is a little more risk averse? I don't want to get slammed. IC? So grab some IV. Oh, IV. Grab some 127.50, Jan 24 at 46 cents. Have stops for $1.50, $3 a contract. Is that realistic? I mean, we'd need a big run, but sure. Gap theory to 70. I mean, Upstart has the potential to move up that high. Gamma's very flat, right? But it's all going to depend on interest. I don't think it's going to move to 70 on its own accord. Even with short capitulation, I think it'd be hard to see those numbers. But if there was enough call interest, which at 40 I'm sure there would be, then yeah, it could keep running. They could take away the buy button. Yeah, sure. If we run, is there so just make sure that you bought before then, right? If we run, is there a Fed talk on Wednesday to rug pull everyone? Yeah, the Fed has a meeting. There's an interest rate decision on the 1st. It could be tremendously bad for the current bear rally. Is Upstart big enough to be posted on Wall Street Bets? I think so. Seems like the degens there would be a significant driver of FOMO. I posted DD to Wall Street Bets once before, but it got removed. Maybe. Who knows? I mean, Wall Street Bets is aware of Upstart. I think a lot of people are pretty aware of it. What do you think positive EPS for GME will do to March and April OPEX? Do you think anything will happen in preparation for this? Well, first of all, so our next round of obligations that are due, provided they aren't risked off over the next couple of days, would be due in Feb. However, there is a holiday, so those may be deferred to March. If they are deferred to March, then that's where the run would occur. Probably after earnings. I don't know if we'll hit positive EPS on Q4 earnings. We could. It's unlikely. But most participants are going to want to see probably more than 1 quarter of positive EPS. Although we could trade in a higher range afterwards. Like we may trade at a slightly higher multiple near our bottom. It could attract some smaller interest. I think as the potential for us to hit multiple quarters of positive EPS begins, so as we approach Q1 earnings, if the data looks promising, then we may start to see larger institutional accumulation going into those earnings. There's some charting on GME. It's looking good. No shit. On Friday, why did you say the market was going to MOAS? Because people just keep buying calls and not really buying very many puts on it. Even with the long side capitulation on Friday, there's just still continuous call build up on the chain. The calls are cheap, right? Because they are mispriced due to the risk-free rate being too low. So yeah, right now participants are incentivized to buy calls, and that's happening. I don't remember which particular data set. Oh, I do actually. Me and Dork were looking at some like long-term VIX correlations with the S&P 500, and some of that data shifted on the daily, which is generally very bullish. Briefly, do you expect continued accelerated price movement on Monday in GME and Upstart? Yeah. We may have a slight pullback due to the options expiration, like in the morning, but I think it looks good. I think we're all a week off. The code 007, from what I've read. Yeah, code 007's not applicable here. Like the theory Mefier came up with is I think more interesting on the rule he found for 6120. Or if 007 was used, I don't think 007 needed to be used. You don't need a Rex code for a holiday deferment, right? You need a Rex code for deferments outside of holiday schedules. So it's very likely that there's simply a fourth part of the trade, especially given that we started running at the very beginning of the MLK deferral window. So I don't think there's any application of 007 or 077 rather. At least it doesn't appear that way yet. Can you elaborate on the next Upstart run? Oh boy. With Upstart on Reg Sho, when would that next run likely be? I don't know. It depends on how much liquidity they get here, and then how hard they short it, and how many fails that liquidity generates, right? People talk, info is shared. Okay, yeah, but I mean, I have a pretty good assessment of the public knowledge of what we're looking at, and it's minimal at best, and no greater than what was already, published by like Citadel and Barron's and Goldman Sachs already. Objective puts at the top were mentioned a few times. With IV peaking, how much data is needed to make them profitable? A lot. Quite a lot. You want them as extrinsically insensitive as possible. Like, you don't want to pay for extrinsic value if you can avoid it. And extrinsic value, obviously, at those prices is high, so you need to go deep in the money, and you need them far dated to dodge that spike in implied volatility, right? So you want them far enough away from the money. Like, they'll have high IV, but low Vega, right? So you want low Vega, high Delta. I just joined and you missed it. Oh shit, I'm sorry. What's up, Tyler G? Welcome aboard, man. I did not even see that.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes Gert in the go. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies while I'm selling CCs like another fucking moon win. Praise be to RC and the VWAP, please, cause I need GME to moon soon, man. Got the van GG on the CNBC saying that he ain't seeing no collusion. Yeah, we might be apes, but we ain't that Joe, motherfucker. Trade trades in his popcorn code.
There are 3 Fridays with double the 10-day volume. One Friday, Jan 22, 21. Friday, March 18, 22. And January 27th, 23. I am aware, SpyFi. I've done the volume analysis of the pre-Opex runs before, but yeah, you are correct. They are not common, and they are very bullish. We'll see how it plays out, right? I mean, that's all we can do. Obviously, we're not gonna sit here and pretend like we can predict the future. We can't, but it does look good. Wow, I missed this whole section of chat. Sorry. Will Jimmy ever see $20 again? Maybe. I mean, you protected your CCs, right? You're okay. I'm not critiquing your trade ideas on stream, man. I don't care. Your indicator basically follows MACD, and I mean, sure, you have a little protection against false breakout signals, but the Dow, the SPX, the Russell, and Nasdaq are all up. SPY and Nasdaq are all up, like 400 basis points in the last week. So, I mean, everything's a winner. I don't really think this is like a valid time to be forward testing indicators when the market's just running hard as fuck and everything's going up. Is this MOAS again? Well, I don't know. Super stock buying options yet? Did you talk about how to manage far out of the money leaps on a run? At what point is IV typically the highest when we have multiple peaks beyond GM? Here's the deal. If you're buying IV plays, sell them when they're worth money. That's it. I mean, you guys are trying to craft strategies that are ultimately going to probably fail you. You're not going to predict the price of those contracts, not effectively, not without modeling them. The best you can do is look at historical data and make an estimate after the time decay that's already occurred on the contract. Or alternatively, watch them and sell them, when we hit resistances and volume is still high and IV is high. If you have a job and you can't manage your contracts, you should not be buying far out of the money IV sensitive contracts. If we run, is there a Fed talk on Wednesday? Okay, so I got this part of the chat. I continue to be shocked how often members overestimate the power of the pickle jar on the broader market. Yeah, I mean, we could all become millionaires and the market probably wouldn't even notice. I finally got my own retirement account and I found out I can manage it myself. What would be a good entry level blue chip to sell CCs on to wheel? I've been doing Google a lot lately. Very stable, decently priced, right? So I'm not too afraid of the downside. And if any downside is realized into like the $70 range, I'm more than willing to buy more there, right? Yeah, so I've been really enjoying Google. Amazon maybe, but not at these price points. If Jimmy Upstart Fubo run and fall like normal OPEX, what are the bottom targets for post-mass for each? Given Upstart is so liquid, is it possible it'll not come back down? I mean, Upstart's also on Reg Sho, so that could limit its ability to come back down as well. However, I do think it is very likely for them to post significantly, well, maybe not significantly. I think it's likely that we see worse earnings for this coming quarter than the previous one. The credit markets still are not functioning well. They're very liquid still. So I would say Upstart is not likely to have very good earnings. And that will probably drag price back down. Uh, there's other factors there with Reg Show and stuff that we can't predict. So yeah, I mean, price could stay up. That's the risk you take when you sell covered calls in the money. Will Sava run with a basket? Maybe. It hasn't run hard, so I think it's possible. I don't like playing the upside on Sava because the options are overpriced due to its very small float. But I do like selling bear call spreads at the top. Is the river runs dry DD being realized? It's kind of crazy, bro. Good job on your DD. Thanks, man. I think it is. I think it might be. It's definitely we're definitely closer to realization of it than we came close a couple times over the last few months, but I think we might be closer now than we have been before. I need to see 400 likes or I'm literally gonna pee pee. Do we have even that many people here? Oh shit. We also have 400 likes. What do you think of big three earnings on Thursday? Miss would start triggering a big sell-off. Yeah. I think Apple and Amazon are very diverse businesses and are more than capable of padding their balance sheets another quarter before they have to fess up to their investors that, forward guidance is off and it needs to be corrected. But we'll see how they handle that. I mean, Intel had some of the worst earnings that I've seen so far for this period, and out of a mega cap, and they're only down 2% right now, right? So, how much does the market care, and how much is priced in? I messed up this GME run by buying up most of my OPEX position in Jan 27 127.50s. How likely are we to get an IV spike? I mean, pretty likely if the short calls sell off and synthetic short positions close, like long puts and short calls, that can significantly change the amount of implied volatility we see as the market maker flips their hedge. I don't think public knowledge is where it becomes dangerous. It's more that financiers that control real money become aware, i.e., market makers realizing they're getting fleeced by forced buy-ins. I mean, what's that going to do? Make market makers hedge more equitably? That's the worst outcome to that is like a fairer market with better price realization, right? Is Wall Street only pricing in 2 more 25 BPX hikes from the Fed at this point? J-Pow moves could really swing markets. Straddles are key here. I'm definitely going to be straddling the Fed meeting. It's a pretty significant one, and I think that analysts are a bit overly bullish in their low expectation for a 0.5 rate increase. However, I do think the Fed is incentivized to be light-handed on this one, because I think earnings, or over the course of the rest of the earnings, if companies are transparent, then that should have enough of an effect on the markets without the Fed's intervention. How far do you see Tesla running? Will you be buying puts at the top? It's still got some room to go. It could hit like 190 right now, I think is possible. Yeah, I mean, I already have like a long-term short position on Tesla. And like I built up some reverse diagonal spreads for like 2024 a few weeks ago. And I've been in and out of those. I'm in them again. So I have naked calls on Tesla for like a year out. So I'm probably not gonna buy puts. I might get some, but not many. Feeling like a boomer. I can't figure out how to shed this gifted Corner Shop membership to become a Dillionaire. I think you just go to the link in the description and choose upgrade. I just want to say thanks for your time, help, and patience. Cheers for more realized gains. Thank you so much, Taking Off Friday. I appreciate it. If you ask in the Discord, I know maybe the mods know how to upgrade the memberships, or someone in chat might. Thank you, man. I wasn't sure if getting shadow banned with my messages. I was just checking that the expected running period you're looking at is the 27th to Feb 1st. Yes, and the announcement you mentioned Feb 3rd. Was that a typo, or am I getting it wrong? Hold on. Let me look. Is there a mention of Feb 3rd here? It runs through Feb 1st. Oh, if it's 4110, and like the bigger part of this run comes on the 1st, then maybe, but I mean, we're not really sure about that part yet. I don't think I said anything about Feb 3rd in the announcements. Feb 3rd is T+2 from Feb 1st. So there could be a continuation of a run if we get a volumetric run on Feb 3rd. Jimmy, Upstart, Fubo run and fall like a normal Opex. Okay, sorry. I'm getting a little lost here in the chat, so give me a second. I know I'm way behind, but that's usually how these go. I try to get to every question if I can on the member stream, so just give me time and I'll catch up. If you've asked it once and tagged me, I should see it. And if I don't answer, it's because I've already answered someone else asking the same question. The expected running period you were looking at is 27th of... Okay, so I covered that. What do you think of the big three earnings Thursday? Got that. I missed... This GME run up by Boeing... Okay. Where the fuck am I? Is Wall Street pricing in 2 more 25 BPS hikes from the Fed at this point? I mean, the Wall Street's currently pricing in a pullback in rates, like a pivot by the Fed before the end of the year, which I think is a little overly bullish. The positive VWAP can predict the future. Can we go over cover call strategy during this member stream? Sure. I don't know what you want to go over. Maybe be more specific on what aspect of cover calls. 1 second. All right. Mike Bristlebout, welcome to Cornishon, man. Thank you so much. But bro, I made 3% investing in Netmarble Joy Bomb, so the indicator works. Did you talk about how to play the IV leaps? Which T+2 spike usually has the highest IV? IV is at its highest intraday when the price is going up on volume. So from one breakout to the next resistance point is where IV will peak. It's a very short window, but it can be very profitable. How do you feel about Microsoft? I like it, actually. I'd buy it in a lower price range, but I'm pretty bullish on Microsoft over the next couple years. Is there a false sense of optimism in the housing market right now? Good opportunity to short housing, builders and manufacturing before March into the Q2 timeframe. I don't think that's a bad idea. I think, yeah, there's a little too much optimism in the housing market, and I think uh, that as we move further into this year and unemployment increases inevitably on the back of the rising rates, we're going to see a larger amount of defaults, and defaults are going to provide a greater amount of inventory, right, which is going to reduce housing costs and disincentivize new construction. So I don't know if it'll be as bad as like '08 to '12, right? But or 2012, sorry. But it may be similar. It'll be faster also. I missed the last several live Sunday streams due to travel. Back in the USA now. How long till ZOM 230? Please speak on Volmageddon. Hashtag ZOM 130. I don't think ZOM's gonna hit 230 anytime soon, man. Earnings are coming up. I don't think they're going to be great, right? They're not going to be as good as their last earnings, and analysts have priced some of that in. Hopefully they beat, which should probably push you closer to your target of 130. Bear put spread on Upstart going into earnings might not be bad. Although the recovery from earnings might be kind of ridiculous again. I would see how hard they short it into earnings. I might go the other direction on that if it dropped really hard, right? Mart LaFlang, will you be willing to make a school stock video about setting up a portfolio which will work for you? Ah, man, that's I could, but in such general terms, I don't know how helpful it would be. I mean, probably in the future, videos covering some degree of like how to create income, like an income portfolio, or and the steps you can take to build that. But I still feel like that's not going to be generalized enough for everyone. Morning, not trying to get too far ahead of my skies, but could we see multiple cascading T+2 mini cycles this week? FOMO on the M equals T plus 2 VUP on the W equals more call buying plus 2 VUP, Friday, etc., etc. Can restate if that's not clear? No, it's clear. I understand what you mean. Yeah, I mean, we've already moved up on Friday pretty hard. I think a sufficient number of important strikes went in the money that we've got. Some T+2 exposure. Call buying on Upstart and GME tomorrow will greatly influence the continuation of those, but or the realization of the rest of the covering volume on the T+2, so like Monday, Tuesday, depending on how that plays out, then yes, we could see a continuation. It's hard to tell when those are done. But yeah, I mean, we'll be looking to see if Gamma Max moves up on any pullback, and if it does, we'll be looking to position for that. Let's talk about Cat. Is it time to buy puts in the money long dated? Probably not. Cat's earnings was pretty good, right? Or Cat's earnings is coming up. Cat's earnings is probably going to be pretty good. I don't know. Cat might be going to like 280, man. I'm still long on it. Also, it's never a good idea to buy puts on Cat unless you're dumb. Don't buy puts on Cat. We've been over this a lot in the past. Buying puts on Cat is worse than buying puts on Dow every time. So if you want to short the Dow, just get puts there. The firings is basically an indication for balance sheet padding. I agree. Yeah, the layoffs recently are not huge and significantly below headcount growth over the last couple of years. So I think they're setting up to pad their balance sheets. Should I start positioning for SPY puts? If so, Feb 395p and March 385p valid strikes. No, those aren't bad. Yeah, I think we can see a pullback in that range. JPAL's going to do 50 BPS. They need higher unemployment, and JPAL won't ease till the poors and middle class aren't working. That seems to be his goal. Or until the dollar is by far the strongest currency and he's thrown enough gas on the global debt crisis. Gotta make everyone reliant on us. It's a good opportunity. As an Amazon seller for roughly 6 years, I can say with confidence that Amazon has been significantly cutting employment by how much longer it takes Amazon to close out simple support tickets. I believe that. In the past, Amazon's always been very quick to cut their employment numbers, so I wouldn't be surprised if their headcount is maybe even planned to be down further than it already is. With this rising market but uncertain future, are there alternatives or an approach to CSPs and buy rights that don't leave you with bags? Picking more blue chippy tickers and even safer strikes? No. I mean, buy rights are bad in volatile markets, as are CSPs, right? And the market is, if anything, right now, very volatile and uncertain. This isn't really a great time to use those as your primary strategies. There's a reason I use straddles every night on SPX. It's because the market's volatile and they have a very good rate of return. But yeah, I mean, selling calls and puts right now, not that great. I mean, you have to keep your risk super well managed. You're not able to really sell theta, which reduces your yields. Not that there aren't companies that are near their bottoms, or companies that will benefit from a declining or contracting economy. There are sectors like energy and manufacturing and stuff tend to do, commodities tend to do very well during these periods, but and those are cheap right now. But yeah, no, it's not a great time in the market for either one of those strategies. You have to be very good at managing them. Otherwise, yeah, you do have a risk of holding bags, but stops can protect you there. Would next week's be better than Feb 3rd? Unless you, well, unless you're buying very close to the money. If you're buying very close to the money and you have the expectation of them going in the money, then weeklies are fine. You don't generally want to carry them overnight and stuff, but they're fine to get like very short exposure or to scalp with. If you want longer exposure and you want to capture more of the run, then yeah, you'd probably want to at least target next weeklies or actually buy some theta. I have 3 weeks of traveling coming up in Feb. What are key dates for me to plan for in February? I don't think there's anything super important in Feb. I mean, CPI, PPI, PCE, the monthly unemployment data, and I mean Opex, but I think it's probably gonna be a deferred one, so I don't think there's a lot to worry about during that period. So the second T+2 peak would be Thursday. Well, that would technically be the first one if we haven't really started running yet. Are you still aligned with your price targets of the SPX? Do you see SPX going to 4,200? Well, we broke out above my price target for last week on Friday. So I do need to adjust my SPX chart for, our current levels, but 4,200 still a bit of a long shot. Right now, breaking 4,100, maybe 4,150 if we see like the collar roll, it's possible. Right now the collar is still in place. When you swing trade large amounts of capital, do you limit the number of options per strike you do, or do you just sell them off in chunks on the way up to avoid slippage? Both. Yeah, you definitely want to be a little more spread out on your strikes with larger amounts of capital. Usually I'll have like calls and a spread or something to limit downside risk. Like the bigger the position, the more likely I am to have some hedging on it for a swing trade like that. Learned from Bobby Putwalls and bought this Fubo dip pretty hard. I'm now up 20%. Is there anything keeping Fubo down past the current 250 put wall? Price target if we break through. I would say if we break through the current put positioning on Fubo, there's a decent chance we see $5. I don't know how long we're gonna see $5 for, but it's decent. I think there's also some resistance at $3 as well, but not as much. So if we break through 250, it's pretty clean sailing up to around 4, and then if some FOMO comes in, maybe we see like 550. 6 is pretty unlikely. It could happen though. I would love if we had like a better gamma max value for Fubo, or maybe a correct one, but we don't yet. Sorry, I was just reading the quant stuff. Okay. All right. When you swing trade large amounts of capital. All right, how far behind am I now? Like 13 minutes? Jesus, this is gonna be a long one. So I've been paper trading on WeBull, but that gives me the ability to trade as if I'm on margin. How should one trade options on cash accounts, more weeklies, and just juggling the T+2 settlement? So paper trading on WeBull gives me more ability to trade as if I'm on margin. How should one trade options on cash accounts? More weeklies and just juggling T+2 settlement? It's T+1 settlement, Victor. But yeah, I mean, shorter dated options and more juggling of your T+1 settlement. Got in about 30% into Friday's run. Have GME 25 and 30, Upstart 22.50 and 25s. If we have a pullback at open, would buying Feb 10s be smart to capture IV and get better leverage? Well, they're not going to capture implied volatility very well, but you could get more leverage with them. I'm not going over the hill today, too sketch. Okay, well, if you're going back home, let me know when you get there. We can chit chat. I know JFresh is dealing with chaos right now. No problem, Jedward. Outlook on Jamie, first part of the morning, downs from sell-offs and repositioning. We could, yeah. We'll be looking, look to the morning DD and see how much of a pullback in liquidity we have in the pre-market. Jamie got more illiquid in the after hours session on Friday, which is indicative that we won't see a pullback. And you know, arbitrage is going to be like negatively skewed. Hopefully we see a continuation of that in the morning, and that really confirms continued upside. But I'll have all that in the morning DD tomorrow. The settlement dates are showing from Jan 27th to Feb 1st. Yeah, I know. I don't know where you got Feb 3rd from. That was my question. The current deferral period we're looking at is Jan 27 through the 1st, which would imply that there was a fourth part of the settlement of these like obligations that was deferred. We don't know what that is yet. I have to do some more digging on. I mean, theoretically, single stock futures and forwards shouldn't be allowed to be traded. There's no exchange for them, but they still are used regularly by ETFs. So finding out the closing procedures for those is a little more difficult because they're not like I have to dig up like old CME settlement guides that still include SSFs and hope that they're still following those regulations and they haven't, you know, changed them. Look at entering a position like Microsoft with some patience and a price target. Do you sell CSPs near that cost basis until you realize the PT and exercise the CSP? Sometimes, or that cost basis with premium, right? So here I'll pull up Microsoft and we can take a look at it. So say on Microsoft, I was targeting, you know, like 235 or 24, well, yeah, like 235 or 220, you know, and the price started to fall into like the 240 range, right? If I could get, you know, if I could sell like a 240 CSP for like $6 credit, that's going to give me a cost basis of 235, I'll do that, right? Because that still puts me at the cost basis target I want, but my likelihood of assignment is higher. And that depends, you know, if I think it's going to slip lower 2020, I might be less aggressive. If I think it's going to hold the resistance, I'll be more aggressive. Are you planning on discussing CC strategies for next week? I think I'd have it down, but confirmation would help. I mean, generally speaking, I sell covered calls when we're trading above Gamma Max, and I don't sell them very much below Gamma Max. I mean, it's not that complicated, but everyone has different cost bases. They have different prices that they're willing to sell at, different risk that they're willing to take. Some of them are not as confident in the downside. I mean, ultimately, the strategy planning is kind of up to you. I can't really help you with that aspect of it. I mean, I know you already understand, you know, out of the money covered calls versus in the money covered calls, and you know where the important dates in GME's future lie. So plan around those things. Take your cost basis into consideration. Consider how much of a reduction in that cost basis is worthwhile for you. I would like a video that shows how to haggle at the car dealership before we have one about portfolio allocations. How likely do you think it is that Upstart stays on Reg Sho after the run next week? If the run happens. I mean, it's going to be on for at least 4 more days, right? Or, yeah, 4 more days. And then we'll see after that, but at a minimum, 4 more days. Do you think GME has finished its run on Tuesday or Wednesday morning next week? The SPX would peak as well. Possibly. I mean, the SPX could just continue if the Fed moves forward with a 0.25 hike. Then it's going to get really fucking bullish. Do you still feel good about BTU? I mean, most of the drop in the rate when rate hikes happen is because, or bump when rate hikes happen, is because uncertainty around the rate hike has been removed. It's not because rate hikes reduce the value of equities. Do you still feel good about BTU? Devil's advocate view: drop in nat gas prices will decrease coal usage. Would it be dumb for Europe to abandon coal? So maybe not a big deal. China is also reopening, and they are by far the world's largest demand for coal, and India is driving more economic growth, and they are the second largest user of coal. So I think demand for coal will not only stay high, it'll continue to grow. Also, just on their FCF and earnings alone, BTU is undervalued regardless of the price of coal, which interestingly, they're not all that exposed to. Can you outline what a large volumetric run on Upstart while it's on Reg Sho will affect the stock price? And when would we see realization of this relative to it coming off of Reg Sho? Well, if Upstart runs, it'll get more liquid. That liquidity will they will attempt to use that liquidity to get rid of the FTDs on it and remove it from Reg Sho. If they're unsuccessful in that endeavor, then they will not be able to effectively short the price, and the next run would be even more, have an even greater magnitude. They can't short. You need to, Daniel Mack. You need to. That's the first rule of Reg Sho is you can't short without a pre-borrow agreement. Those are hard to get if there's a difficulty in locating the stock. Are deferrals mandatory? No. And sometimes they don't use them, which is tough. Like November of 21, we just ran. I remember correctly, JPM updated their collar sold calls to 4065 shortly after the original 4030. As their long puts are at 3600p, would it be very profitable for them to put them all in the money by Q1? Are they expected we could see below 3600 before March 31st? Yes. I mean, that's currently where they're positioned. They could roll it up though. Like we could fall under the collar again, and then they could roll the collar up. So don't assume it's so static. Also, don't assume that they're predicting the correct levels of the market. It's just a set 5% above and below. So short calls 5% above, long calls 5% below, with some variation for analysis, but not much. It's 3600 to 4060, 4065, I think. Assuming we're looking for more high volume days on GME, is that from MM buying or ETFs? For the first 3 days, ETFs. After that, from the market maker. And long volatility positions coming in and more people buying calls. So FOMO and the market maker are what drive the continuing action of OPEX. Assuming we're looking for more high volume days, okay. What would you consider a large enough swing trade to hedge and use other strategies to limit risk? 50K? I mean, that has to do with your portfolio allocation and how big your portfolio is, Max. You know, if you know you have $1 million portfolio, $100,000 trade is 10%, right? If you're trading 10% of your portfolio on one trade, you should probably be hedging it. Do you have any thoughts on this being the last bear rally and a crash is coming soon? I mean, if the Fed goes easy and earnings are padded well enough, then why do we have to crash? Crashes are a black swan event, and we had one in 2020. We don't have to crash. We can have a big correction. We can have a big pullback as we move into the middle of the year. And, you know, it's more obvious that margins are contracting. Companies may just be honest and start issuing negative forward guidance now. Microsoft has, AMD has now. You know, Nvidia and Amazon and Apple and Google and even Google's kind of pulled back some of their forward guidance, but they can all start, you know, giving worse forward guidance, and that would have a huge effect, right? Because currently we don't have a lot of downside catalyst because longs are up. But if longs see that the growth potential in the stocks that they're holding for their core positions is going down, they're going to be incentivized to sell. But you need a sell off so you need a catalyst for a crash. I'm already home, finished shoveling the driveway, nice and sweaty, down to chat if you are. All right, let me just try to catch up on the questions, and then I'll hop in VC. Just tuning in. Upstart gonna rip this week? Maybe. Looks good. I'm excited. When do I set stops on my protective calls? I mean, at profitability. The idea. I mean, it's just like any other call, right? Like you're trying to take profits to offset the loss that you suffered from the CCs, or the upside you missed. More accurately. For SPX, just straddle overnight every day until the market takes a dump later this year. I mean, that's kind of what I've been doing. As long as volatility remains high, yeah. Although, as we get more and more bullish right now, there is a tendency for me to favor the like call side of those straddles more and more. If Fubo were to run, especially with VIX dropping, if Fubo were to run to $5, do you think it would stabilize at a higher price or eventually pull back down to its recent low? I mean, if it runs to $5 and generates a shitload of implied volatility, they're probably going to short the volatility on it again. Their upcoming earnings is probably going to have some really good subscriber information. Hopefully, some more guidance on what they plan to do with their ad supported content. And you know, could lead to revaluation. If that happens, you know, we may just run off of that as well. But yeah, I mean, volatility shorts are going to short volatility. So if volatility comes in, expect them to show up and ruin the party. It sounds like you're more confident in a Feb deferral versus a OPEX bump. Thanks, Pickle Man. What a sleepy day. I'm too excited to nap. Sorry if you already commented this. I'm behind. Is the volume Friday encouraging to you? Yes. Also, are you concerned that GM hasn't moved much, or are you just waiting for Monday's data? I'm not that concerned that GME hasn't moved very hard yet. Or GM hasn't moved very hard yet. I think it's mostly skewed by short calls that probably haven't closed and may close on Monday. It's also gonna be like the data we have for Friday is inaccurate due to the lack of knowledge of exercised positions. I can intraday Monday, I can rely on another data set that we have, like with the gamma flip point a little bit. Although I'm not fond of it. And we can look at the gamma levels on the chart and get a at least morning update idea of where we stand. It's not the data I want, but it's not totally unreliable. Isn't shorting nowadays done with these put walls and sold calls? Does Reg Sho really hinder their capabilities? Sure, the market maker has to hedge, and the market maker needs liquidity to do it. The more options interest you have on these stocks, the more obligations are created, which is what I tried to explain to people back in like November of 2021 on GME. If everyone's buying like far dated calls, right, with decent delta and plenty of time, that puts a lot of pressure on these positions because then they're fighting the market maker for secondary market liquidity, right? Because the market maker is going to be using that liquidity all the time, and that drives up our volume and volatility. It also makes our runs bigger when they happen. But people are broke and don't like leaps, and other people think options are evil. So what are you going to do? Looking at contract prices are expensive for my port. Can buying far out of the money for lower contract prices be profitable or just dumb? Um, maybe just dumb. I mean, if you can't afford it, stay away from it. Don't try to play a bad position on a good stock because you can't afford a good position. That's a huge mistake that a lot of people make. With obligations seemingly pushed for so long, are you not wary of selling CCs around Gamma Max? If the theory holds true, won't we be seeing abnormally high price action? Or we'll be seeing more price action. But, I mean, the first test of Gamma Max and the second test of Gamma Max are very different things. I mean, I know when I'm going to sell covered calls, but I'm not going to be very transparent about it because I don't want to get front run. I have to sell quite a lot of them, and I need uh, a lot of strikes to target at a similar time to do it. So, yeah, you're kind of on your own as far as managing those goes and figuring out the best timing for them. And we've been over this a million times. I know it's tinfoil, but China invades Taiwan. What happens to chip companies? Intel goes up, I guess. I don't think that's going to happen. That would be terrible for them, obviously. But anyone else's audio cutting out a bit, or is it just me? I don't know. Probably a dumb question, but if you have the cash, would buying back your cover calls be similar to hedging with a higher call? Is it the chance that your CC doesn't get exercised the benefit? You can roll out your covered call, your original one, right? For more theta. And then you can use the profits from your out of the money call to buy back your covered calls when prices drop, right? It's not a great way to protect them, but it does protect them a little bit. So if SPX straddles aren't really possible for a small port, can the strategy work on SPY well enough? You generally need a bit more theta to do it, but yeah, you can do it on the SPY. Mastermind L 1998, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord and I'll get you added to the country club after the stream, man. Thank you. I've been making that mistake. Awesome. No problem. When does the options chain receive an IV bump for earnings dates? In 2022, GME released a 10K on Thursday, March 17th, which is the equivalent to Thursday, March 16th, one day before the monthly expiry. Generally, GME will start to see an increase in implied volatility after they announce when their earnings is, although the last earnings didn't see any significant increase in implied volatility. So It depends. It all has to do with how much and how hotly anticipated the earnings are, and how much of a move the market maker is pricing in. Sounds like leaps for PMCCs almost better than holding shares to sell CCs on for something like GME. It can be, yeah. I'm gonna send you a question later because I'm too far behind on the stream right now. No problem, man. Fubo cost basis 270, decent right now. Not bad. It's better than mine. I think my cost basis on Fubo is like just almost at $3 right now. Does Warden still live under your desk? Can you ask him to help build a gamma ramp? Gross. I'm literally too ignorant to understand how it even works. How difficult, complex is a straddle in your opinion? I think they're pretty simple. I haven't traded options yet, so I have no experience, but it sounds relatively easy when you can anticipate swings by the Fed decisions, e.g. I mean, they're not very complex. The variable with straddles is how much you can profit off of them and how well you manage them, right? I mean, ultimately, you'll make some yield if it moves decently in one direction or the other, right? Um, Managing the amount you make off of them is really where the skill comes in. You know, understanding the levels the SPY is trading at, understanding if you can get out profitably on one leg, leverage the other leg, and then get out profitably on that leg as well, right? There's a lot of different ways to handle it. You can, sell one leg and then use the opposing leg again if you're trading in a narrow range to strangle, right? So it's very flexible, which is good in a high volatility environment, right? And you can always just manage it the standard way, which is close the loser, chase the winner, right? And that can be very profitable as well if done in a timely fashion. I was I always wondered if it would make sense to try to educate RSS on the idea of using exercised options to buy shares. If you're buying at least 100 shares, but a $1 weekly and take delivery, I mean, I think an effort was made on that front previously to no, I mean, it wasn't successful. Is IBKR Pro worth it? Yeah. If you're not trading a lot of volume in options, then maybe not. But I think generally speaking, it's worth it if you are. Not playing options for the usual reasons, rather using options to take delivery of GME in a way which bypasses the not a crime, but really compliance that they regularly cite. I mean, yeah, technically, I would say that exercising options is a better way of taking possession of GME, or taking delivery of it. I think it's better than any at the market purchase through a broker. I mean, if you're trying to dodge crime, because of the OCC's collateral demands, effectively creates like a mini moment of DRS for a leveraged position. Upon reflection, my fond memories of Warden all stem from his mechanical keyboard. I have a mechanical keyboard, I just don't have my mic that close to it. Bag holding Boyle CB of $21, down 30k. Jesus fucking Christ, man. Wondered if I should sell CCs, CSVs to recover some losses over time, or cut losses and focus on other plays. Might take a year. I'm looking for ideas. Natural gas is abundant, and it's hard to predict the fluctuations of it. I don't know. I probably wouldn't. I don't know. You have a couple months where there's a shot of natural gas prices spiking, but it doesn't look good. If bullish Fed decision, do you see the SPX going over 4,200? It could happen, yeah. That's possible. Not sure if Bobby questions are allowed. Using made-up numbers, if iCup RC offers a $10 buyout of Bobby with a spinoff of Baby 1-to-1, would Baby's revenue become a deciding factor on the price action? If Baby were to be bought out, it would just pay off the creditors and the shareholders wouldn't receive any value from it. It's already being leveraged as part of a revolving credit line. So who cares? Maybe you're the wrong person to ask, but does bar charts show Friday close updates at end of day Friday or after market open Monday? I think Friday. I'm not sure, but probably, but just based on when exchange data is released, I would say Friday close at the end of day Friday. I don't think there'll be an update until end of day Monday. I'm trying to do the math on the best expiry for CCs. What have you seen is the best balance in theta decay and IV harvesting on a run? 60 EDT seems like a good balance of exposure, but what am I miss? I mean, you don't if you're selling in the money cover calls, you don't give a shit about theta, right? First off, theta's not going to decay quickly on them either way. You do want sufficient time for the price to drop and IV to crush. So you don't want to sell them too short dated. But you definitely don't want them too long dated because then they'll be expensive to buy back and minimally profitable. So there's a sweet spot there. I'm not going to tell you where, but you can figure it out. Girk JSmart here. Sorry about banning you. Please come back. Thanks, Vupper Market Carcass. It's too late. European manufacturers are still resorting to heating oil. Gas is solid. We'll see. I mean, I have exposure through BP, but BP is exposed to, like more sectors, right? That's one of the reasons I chose it, was because it wouldn't be as volatile as nat gas alone. Have you guys ever seen that, like, they talk about me on Superstonk like I'm Voldemort? Like, they don't say my name, they're like, that pickle guy. Thanks. I know where the creamy middle is based on your previous comments. Not all that hard to figure out if you've been listening a couple months. Swap meeting in 5, 4, 3, 2. Yeah. Let's see what's going on. Can you hear me, Dork?
What's up?
What's up, dude?
How you doing?
Doing all right.
I'm doing good too. Not on the road. It would have been so dangerous.
Yeah, that looks actually deadly.
I mean, well, and it's not even the mountains too, so it's like, it's like super bad.
Yeah, I've been over the, like, were you taking the 80 or the 50?
Yeah, I was gonna take the 80. 50 would be just absolutely fucked.
Yeah. Especially with your
yeah,
transmission before Opex.
yeah, the transmission. I would have cooked my clutch, and then also like if I had had to stop it all like on an uphill, even with chains, I'd have just been fucked.
Yeah.
Well.
Then you got to Dahmer
Anyways,
party it and eat other abandoned motorists.
yeah, exactly. I'd have to go and sort of stop them in the middle of the road, cause a pile up, and then just stock myself up for the next 5 days.
Well, how you feeling? You want to gloat yet, or do you want to? We'll hold off on the gloating till next weekend and be objective right now.
Yeah, I was super smug on Friday just because it was such a positive sign. But I'm gonna wait until everybody makes way too much money and then loses it all, and then I'm gonna make fun of them.
Yeah, that's my plan. I can't wait to see how many people just lose, even though the price goes up.
Oh yeah, it's gonna be wonderful. I can't wait to see who buys the top, like the tippy top. I hope it's Popcorn Trader.
I think it already. Well, I mean, I'm sure he's targeting like $90 right now.
Yeah, I'm feeling pretty good. I just kind of, since I had time, took a quick look sort of at like how GME is shaping up over the past just few weeks. And it kind of looks like it's a little bit on the warpath towards positivity, right?
Yeah, no, absolutely.
So I'm expecting. I mean, I think that it was way underpriced. I mean, it's still overpriced, but it was underpriced for the situation. I think, around like $16. That was kind of ridiculous, but this will probably settle out around 18, 19, I'm thinking. But I think there was still a decent chance for something wacky to happen next week.
I was very interested in how little aftermarket liquidity we got on Friday.
Oh yeah, we lost a little bit.
Yeah. It slipped just a little. Which is the first time that's happened in months. I mean,
Yeah,
even like from the 10th through the 18th, where we were, trending towards a normalization, we were still getting that pullback every night and morning in liquidity that was stabilizing volatility and price action, and this is the first time we've seen it slip the wrong way, or well, the right way for us, I guess.
usually every candle just sort of repaints from super high up to down low, but this one just kind of just popped on down. Like there was no sort of anything happening in the aftermarket that would imply that, they're kind of using it all together at least, which is interesting to say the least. But we gotta. I think Monday is probably going to be a pretty important day to sort of confirm that this is actually a reversal in trend, right? Because right now we have like 2 data points,
Yeah.
so we need a little bit more to
I
really
mean, the
believe
short.
that.
So some of JFresh's. I know he's not here to talk, but I'll go over it a little bit. Some
Oh
of
yeah.
JFresh's data looks like the short vol was pulling back, like the synthetic shorts. Look like they were pulling back. We want to see more capitulation in the short calls. But the synthetic shorts were closing out and the long puts, so that's a good sign. At least they're getting scared off a little bit. And obviously, that's going to be realized on the market maker side this coming week. So,
Yeah, and it seems like too from some of the data I've looked at and his charts on SPX and VIX, uh, it seems like we're getting pretty close to having that sort of that offset sort of, get back to mean at least. It might swing the other way for a bit, but it's going to mean. Hey, sweet. Yes, exactly who I want to listen to.
oh, it's JFresh. JFresh here to talk about the expected kurtosis. Are we looking at kurtosis?
I don't know. I wasn't listening. I just saw
Oh,
that Dork was on, so I popped on.
Tell
What are you
us
guys talking
about
about?
your charts.
we were talking about the kind of like the liquidity indications we were seeing on GME going into the after hours on Friday. It's the first time that they haven't gotten back liquidity in the aftermarket since August.
Yeah, I think there's 2 million shares to deliver to in the money calls that someone
They're gonna have
didn't
to get those from
didn't,
somewhere.
didn't buy yet. Oops.
Or
Which
they're gonna buy, or they're
I
gonna
was
bail.
talking about earlier means that if we see a continued trend of normalization and liquidity into pre-market Monday, that's going to leave us with like significant negative foreign market arbitrage, which means that we're set to just like rip it open, which can then potentially scare out short call positions.
Yeah, I think we're definitely at a precarious tipping point. I still think that, like all situations with GameStop, this still, even though it kind of looks like something we've seen before, there are still things that are off the charts different than what we've seen before. And so it's always interesting to see what's going to happen. I do think that the market needs to at least not drop out, completely take a dump on Monday. If we can pop up over 4,100 for a little bit and kind of hang out there enough, think things might start to get a little squeezy.
I think we may have enough momentum to resist active fund pressure, or very close to enough momentum that the active fund pressure will not affect us much. Remember that, you know, our correlation to SPX on these runs drops off massively, right? As like as we see more normalization, our correlation with like SPX, ES falls off.
Yeah, but it's always helped, right?
Yeah,
And
oh
there's
yeah. I mean,
always,
well, that's not true. It helped this year.
and this year, yeah.
And in 20, I'm not showing that to the poor's dork. In 2021, you know, it was the opposite, right? Like the market went down and VIX went up and we went up. And if we are as Dork is attempting to indicate with his statement that they can't handle the truth, if we are entering a continuation of bullish momentum, we could see, you know, market-wide short vol kind of reposition, right? And that would mean, you know, VIX up, GME up.
Yeah, I mean, I think I'm still definitely, I mean, just based on the correlation between the SPX and VIX that I've been following, I'm still looking for more resolution of these apparent short calls that are on the chain. It's definitely slowly resolving. I would say it's about maybe halfway resolved.
I feel
And
like
it's
a big part of that's got to be like the JP Morgan hedged equity funds, because they're at like 40-25, 40-30, and 40-65. Like the big ones at like 40-65, but 40-20, 40-30 are like their smaller equity funds. Like they have those collars all over. And there's a few other ones, but they're all kind of in the price range we're at right now. And that's probably a big chunk of the like sold call volume on SPX.
yeah, and this is all on the SPX, right? Because a lot of what I'm seeing here isn't really present on the SPY.
Yeah. Well,
And so I
SPY is
think
usually used to hedge like SPX. It's also like a big liquidity sink, so it's got like a really skewed arbitrage, right? Especially right
yeah,
now when liquidity is in such high demand, right?
It's not only
fair.
that, too, it's also that they're traded. Europe SPX is a European style cash settled index option, and SPY is a American style option. So shorting volatility on it presents a lot more risk.
That's true. Yeah,
Yeah,
sold puts on SPX are very safe.
yeah. I've been looking at you know, just the Greeks on SPX going forward. It seems like the last 5 trading days or so, we've sort of been sandwiched right between gamma neutral and delta neutral. And both of those indicators are slowly pushing up and continue to look like they're pushing up. And so, you know, the super secret gamma neutral number I have, which is based on Voodoo, um, is around 475. And so if that pushes up as much as it's been pushing before, I mean, we're going to be at, you know, 4090 to 4100 before we know it. Now, obviously, that the thing that I'm really worried about is we might be threading quite a small needle here, because with GameStop, you know, I know the effect or the necessity of a market moving up is questionable after a run has started, but you know, the information coming out of FOMC this week could derail some of that momentum.
Yeah, I agree. Very similar to like November. I mean, I see, especially with such a big move on Friday. I do see like, or I worry at least about the potential for like a Freg's Day scenario where they try to, you know, they ramp up volume really hard tomorrow and Tuesday morning, and we realize liquidity very rapidly, right? And then they're prepared to short just as rapidly at the Fed, like by the time the Fed meeting hits. But that's still
Yeah.
most of the day, like through Wednesday, right? So we have some time.
Right. Yeah. But
Like,
I'm
because the Fed
looking
decision's not
definitely
till 2
for
p.m. that day.
if we're not just moving, if we're not all just like having a blast right out the gate, I'm going to be very cautious moving forward. Another thing too is with the SPX, and again, this is not present on the SPY, but with the SPX, they're definitely still underpricing calls relative to puts, and
Yeah.
that's only been getting worse since I started talking about it. And that could mean that, hey, there's some opportunity to buy some calls, but really what it means is nobody even wants the arbitrage on the basically free money from buying some of those instruments. So everybody's betting real hard on ouchie down downs, and market is largely driven by sentiment, and it's telling us everybody wants it to go down. So we'll see.
Yeah, I think our sustained periods above like gamma neutral, or even your super secret gamma neutral on SPX, at least during the bear market, have been very short lived. So
Yeah.
I am equally cautious of the potential downside there.
So there's been 11 tests. I looked at this yesterday. There's been 11 tests of 4,000 on SPX, and all but 2 of them took less than 4 days to be rejected, right? So like there's a high probability of being rejected below 4,000 again. But I mean this cross of 4,000 I think looks a little more bullish. Like it probably looks the most bullish since the one that happened in July where we just kind of like VIX just died.
Yeah.
I, I kind of like this uptrend. I think it does have a lot of momentum, but it could just be some sort of big giant reposition, kind of like March.
I don't disagree. I do think we're finding higher and higher supports.
Yeah.
But there's definitely some I mean, the more we move up, the more downside room we open up, right? So when
Yeah, that's the way I'm looking
if
at
we
it.
move up to like 4100, 4150, right? We hit those levels from like, or close to those levels from like back in August. Then, we could drop very, very rapidly.
Yeah,
And
and
right
I mean,
now
like,
we still haven't, even Friday we didn't break the like more local highs from like December and November. So yeah, I'd be cautious. 4120 is pretty significant. If we break above that, that's probably going to mean there's a lot more bullish momentum coming in. Right now, I would say it feels, at least from where I'm looking at like call positioning, especially on the intraday, it feels like there's no short buying. Like no one is confident in anything beyond long side sell-offs. We'll see puts build up, right, as the price runs, but they're building up in a very narrow range. Not like December or November was, where we were seeing them build up like 50, 80 basis points out. Now they're barely building puts up like 20 basis points to the downside. And then we see long capitulation, right? And then immediately like we see VIX stabilize and longs reposition, and we start moving back up again.
yeah, I mean,
And
another
that
thing
over
that,
the last few days, that's been like every drop has just been followed by a massive bounce, right?
yeah,
Like
I
since
mean,
last Tuesday. I mean, it's just constant up.
if you look at VIX too, I mean, it's been plummeting. Like it's below an 18 it's below 19 handle now in the 18 ending at 18 and a half. Like if this pushes below like to like the 17 range, like that's gonna be the lowest VIX has been since like I want to say January. Yeah, right
It's
around
got to be pretty
January.
close, yeah.
So, I mean, that's something I'm looking at. And as it gets lower and lower, I mean, I'm definitely going to be looking at a little bit of hedging on it, just because we're still not out of the woods, and VIX could spike and equities could go down. So it's just, it seems prudent.
I agree.
But yeah, it's right now, like in the near term, like next 5 days, yeah, I'm feeling pretty good. It comes down to the Fed, though, like you said. I hope they do 25, but Jay Powell's remarks about making some politically unpopular decisions makes me worry. So
I mean,
we'll
that's,
see.
yeah. I think there's incentive for them to move forward with 0.5. I think there's good reason for them to at this point. But I also think that they may want to save that for later when more of the supply shock is realized from China reopening, and how that's going to play with commodities and manufacturing picking up.
Yeah, I have a feeling oil's gonna move up a bit
Yeah,
once China fully reopens.
oil's looking like it's going to run again, but nat gas is, as we were talking about earlier, I don't know if you heard it, but nat gas is still very low, and Europe's still having a very warm winter, so some of the energy impact is at least being absorbed by that.
Yeah,
Yay or
it's a
nay
fairly
is
positive sign.
38.59 a meme. I mean, right now it's a meme. It's in excess of 15% above Gamma Max. If Gamma Max changes, maybe it's not.
Yeah, I'll just say, I mean, one thing that's very different after the split as compared to before is there's just so much less interest at the higher strikes, right? And I think that is largely felt across all meme stocks and all just sort of anything that's not a mega cap or anything that's not a huge part of an index or everybody's portfolios. The amount of open OI on pretty much everything is way down from the beginning of this year. And so I think
Yeah.
that plays into the overall skittishness of investors to pick a direction right now. Everybody's just waiting. They're waiting for something to happen.
I do want to say that this, though, on GME moves that are well telegraphed, do not underestimate the amount of people that will overpay for calls.
Yes. So I mean,
So we did
part
that.
of
We did that in March. We underestimated it, and the market was down, and things didn't look good. And we definitely underestimated the amount of people that were just willing to buy calls significantly increased premiums. And most of that run was propagated on the back of that, because the initial
yeah,
volume wasn't that crazy.
and that's part of the concern here, right? Is a lot of this is going to come down to something that you just cannot predict, right? There's no information available that I'm aware of other than public sentiment, which I do track, uh, and I haven't seen a huge spike in that yet. That would indicate, how high it'll run. But you'll always notice that on all these runs, you get your first part of the run, and then you get a little bit of a lull, and then you get your second part. And I think that's propagated by a number of underlying mechanical reasons, but a lot
Yeah,
of
it
that
is.
too is just that people are always just kind of piling in over time, and yeah, well, it's just something you can't predict. So enjoy it while it's going up.
I do
Get
like your
out when it's going
attempt to.
down.
I do like your attempt to predict it here. But I also don't want to read any of these numbers in public.
No. Again, correlation is not causation, but I can say the stuff that we're not sharing right now is largely simply because I haven't fully fleshed it out. I'm basically asking the question of, can I back out from the data available to me what the probabilities are that the market makers are using to price things?
Yeah.
and then try to back out from that. Obviously, what do they think is the maximum probable price at a given time? And so that's where some of those numbers are coming from. It's from trying to determine their underlying probability distributions. But yeah, there's some. Basically, I mean, what we're seeing is that the skew in the probability distribution. So whether they are skewing bullish or bearish, has on a lot of these stocks has gone up more than it's gone up all year, and then has dramatically changed course very rapidly right before, so about the Monday or Tuesday before GME and Opex expiration. So there was a lot of positioning on the GME and Opex that dropped off, and obviously when these probability distributions change so dramatically, that's when you start getting bizarre volatility, and I think we've been seeing that in a lot of places. So historically, what does this number mean? It means that, I mean, so far skew has changed much more dramatically than price has on a lot of these, and I guess that's all I'll say.
Yeah. I'm okay with that. That's I think that's a good way to put it.
Well, calls or puts?
I mean,
honestly, straight up and straight down. Good luck.
I don't know about you,
Good-
but I'm not overpaying for puts right now.
Yeah.
Yeah, I mean, there's not a whole lot wrong with cash right now, especially for people who are very risk adverse, at least until after Wednesday. I mean,
Yeah, it's true. From a broader macro perspective, I would say that yeah, there's nothing wrong with just being cash and waiting. But what if China doesn't reopen? Oh, that's perfect, right? Because we'd be sitting on a bunch of rate hikes and a super strong dollar in the middle of reshoring most of our industry. But I mean, China doesn't reopen and China falls further behind, right? They know this. That's why they push to reopen after a year of not, right?
yeah, I still am less worried about China than a lot of people are. I did read something interesting the other day that we haven't really discussed, which is going to have a negative effect or a negative impact on the aggregate demand of China, and that's just simply that their population is decreasing.
Yeah. But that's I mean, that's going to be so far out, right? And you know, that economists have talked about that for years with like the effects of the like one child policy bleeding over into like the next like 2 to 3 generations. And then also, you know, and something that analysts weren't predicting back then when they were talking about that was like the increased capitalization of China and like its move from you know, a communist state to more of a capitalist one has further decreased their birth rate, right? As you know, capitalist societies are wont to do. They have fewer children.
Yeah, I think that the China threat was I think I honestly, in terms of the monetary threat from China, that was kind of overblown by Ray Dalio's that Principles of a Changing World Order video that he pushed everywhere in the book and everything. And I
Yeah.
mean, there's quite a few flaws with it when you kind of look into how he sort of models his data. There's a bunch of great videos out there of people who make very cogent points as to why you know there's a few flaws in it and that the time frames are probably skewed. But it does bring up some decent points though about like, you know, monetary cycles and things like that. So there's good information to take away from it, but I think that going full bear, you know, and China simp is not exactly. I don't think that's the thing you should take away from it. It should be more that you know, in like in the long term, it's important to be safe with your monetary decisions in order to preserve your currency and prevent it from getting out of control, you know, and you know, Jay Fresh loves to say inflation has been solved, and I mean, sure, you know, it's going, you know, down, but in the long term, you know, there's impacts, you know, like when you print so much money, there's some things you feel immediately, there's some things you don't feel for several years. So you know, it's just you're sticking a bunch of chaos into the system by injecting money, and it generally plays out the way you want immediately, but in the long term, it's a little more of a speculative decision.
Yeah, I agree. I agree that inflation is on the decline, and JFresh is right that based on the data, the Fed should stop. But
Yeah.
I don't think that the raising of interest rates is entirely about inflation. I think there's far more to it, and like a continuing, at least this party is pushing back against China's economic growth quite a lot, and I think part of the Fed's decisions is to continue that pushback. We need to build up supply, we need to build up our manufacturing, and we're doing that, and by making the dollar stronger and holding a persistently high rate for a long period of time, we're able to essentially exacerbate China's current situation. Not only China, but now Russia as well, right? And yeah, that has effect on some of our economic allies as well. But all of those are advantageous to us.
Well, as especially as Europe's biggest ally too. I mean, even though it hurts them in the short term, a strong U.S. You know, manufacturing base and dollar and everything ultimately benefits them.
So someone brought up, someone just clarified and brought up the SPX and its correlation from now to the .com bubble. And I will say that yes, the similarities between our current PE ratios and the .com bubble are very striking. I mean, obviously, we have several large corporations that make up a big chunk of the weight of the S&P are still severely overvalued, at least based on what we can see happening to their future earnings, right? And a lot of the realization of those collapsing margins is what drove the deflation of the popping of the .com bubble. So I would expect some of that to play out similarly, although this bubble backed with inflation, so you have to account for that. And then also, the housing market is very affected by this one as well, as the Fed tries to combat that inflation. So it's not going to be the same, but there are similarities.
Yeah, another thing to note too is treasury rates are in a much different place as well. So, you know, liquidity and its availability, you know, is different. You know, one way or
Yes.
another. I'd have to dig in more to see like what exactly it means in terms of the way cash can flow. But there's
I mean,
some
quantitative
implications of
tightening is
that.
having a very restrictive effect on the ability to generate liquidity through treasuries.
Yeah, and I mean even just to sell treasuries right for cash, I mean, it seems like that even doing that as a large institution is risky business right now.
Yeah, that's why everyone's just sitting around waiting.
Yeah,
But I
I
think,
will say this about Ray Dalio is, he bought puts on October 13th when I half ported calls.
I see.
It's personal. But go ahead, Jay first. Sorry to interrupt, man.
oh, I was just looking at, I'm pulling up the SPX here and going October 13th. Ooh, yeah, there you go. Yeah, we predicted that.
Yes, we did.
Yeah, that was fun.
And based on the amount of puts that got burned up, I would say that we were right and a lot of other people were wrong. Like a significant portion of market participants were incorrect.
Yeah, I was so excited on Fridays. We were literally less than $6 away from my ridiculous statement at the beginning of January that we're going to 4,100 by the end of the month. We still got time.
Maybe we're getting too good at this. We need to stop talking to the public.
I
least it's
definitely need to
covered.
stop making fun of people's puts that they broadly telegraph in the Discord, because the day this turns around, I'm gonna have to listen to it all.
Yeah. You should probably rein in your bullishness.
I've been trying to. I do think we're running out of easy room, right? We're getting to
Yeah.
like the riskier,
Much riskier.
much riskier sort of coin flips, and so yeah, everyone, it's a coin flip. If you can't handle that, if you can't handle 50% on just about anything right now,
Cash is still
it,
king.
maybe chill out for a week. Take the week off.
Yeah, you know no one's going to do that, but
Yeah, I
it's
know.
I
Everyone's already
agree.
got
A
their market.
responsible investor right now would be holding their cards, not playing them.
Yeah, we know everybody's gonna, full port into GME weeklies on Monday, and
Wasn't
Great.
Microsoft the canary in the coal mine for the market dumping soon? No, they were honest with their forward projections. They could have been more honest last quarter. You know, none of those mega caps are currently super. I mean, their prices are down. They're not very incentivized to be completely transparent with their forward guidance yet. The layoffs indicate that they're going to try to pad things for a little while longer. Once we hit Q1, they can't hide it anymore, right? So, I can see us pulling back here due to the Fed, but I could see it recovering also and into Q1 earnings as investors get bullish on more of a turnaround that never comes.
yeah, I mean, I think, and I know I'm beating a dead horse, but I really think that, a big part of navigating the next half a year is that the bulls are all thinking that, yeah, we might have a few bad quarters and they might be a little bit worse than we think, but then we're going to turn right back around, right? And so why sell, right? Why not just buy the dip and ride it out? It's half a year. It's not even 1 year. I'll get my gains by December.
Never underestimate people's desire to buy dips, even if those dips are not the actual dip, right? Like everyone's like, oh well, we hit the top of 2021, that's the bottom. No. you haven't seen bottoms, right? Like I mean, when the market bottoms out, that it really fucking, it goes down to like, not like 2-year lows or 1-year lows. It goes down to like 10-year lows, 15-year lows. So don't just assume. Too many people assume they're buying the bottom.
We've all invested
But
in
that also
GameStop.
means that, if you think about the variance on those positions, right? That means if we run up and things look really bad, those people are much more likely to capitulate. Right. And you get more and more of the weight of positionings in a narrow price range, and that's when you can start to get, a sell off. Like going into this year, everyone was positioned after the 2020 crash, right? So everyone's up. No one wants to sell shit. But, if they start leveraging into the SPX at like 4,000 and all of a sudden we're moving down to like 3,800, 3,700, they're going to get a lot more skittish a lot sooner.
Yeah, we've all owned GameStop for 2 years. We know that there is no bottom.
Just when you think you've hit the low, you find out it's a little bit lower than you thought. Yep.
You realize it's going to $10 in March.
Maybe.
Oh, yeah. I'm waiting. My honestly, and I know this is kind of tinfoily, but I'm just waiting for the talking heads to start turning bullish. And
Kramer's been bullish since like October.
Yeah, but Kramer's right. Okay, he's correct on it.
Yeah, don't forget Kramer now has his own hedge in the market, right? He has his own ETF that he can just buy. So he can never be wrong ever again. He can say whatever he wants and then just buy his inverse ETF.
Yeah.
Nice.
So, I'm waiting for like the Bank of America, chief investment officer of mutual whatever, like the they bring these people out and kind of march them onto the screen to talk, and when they start saying things about how this was the bottom and it's still a great buyer's market, that's when I'm ready to start kind
Just
of
wait for
moving.
Goldman Sachs to report that they're going to be pulling money out of like RRP and buying into long positions.
Oh yeah, good
Would
idea.
you say that now is not a bad time to buy long dated puts in July or even Jan 2024? The economy is far from fixed with potential political conflict on the table. When the crash really comes, if it comes, don't presume crashes are going to happen. No one would have the ability to chase puts anymore. Oh yeah, if the market slips like 800 BPS in a day, you're never going to be able to afford a put. The Vega, me and Dirk were looking at that the other night. Like the Vega on like April like 3200 SPY puts is like 1 point, what is it, like 1.82. So it's got like a, right now it has like a 2x multiplier on volatility. And if VIX hits like 40 or 50, you'll those contracts will cost like what a house does.
So nuts.
Yeah, but that's the thing that's really, really peculiar about the options market, right? People want to hedge. The demand for puts is just unjustified by any measurement that people can come up with. Literally, the market would have to crash like 1 or 2 times a year to justify the value that people pay for puts. So,
hey, we make a lot of money on the money thrown away on hedging, okay?
Oh, sure. Yeah. I'm just saying, one thing I worry, I guess because volatility is so low right now, yeah, I guess farther dated, lower OTM puts could be decent, just because you don't have to worry about a whole lot of volatility changes. But people were talking about, is this a good time to buy puts, back in November, October,
Yeah.
right?
Yeah, it's been nonstop. Like the Nvidia position has been the bane of my existence, right? Because I shorted it, it fell, and I sold my puts, and then it ran back up again. And everyone, like every day, everyone's like, "Hey man, should I buy Nvidia puts now?" And I'm like, "Well, it's still fucking going up. Like, I don't know what to tell you."
Yeah.
Like sometimes you just gotta
Yeah,
wait. If you want to be a bear, you gotta wait out the bulls because they have a lot of stamina.
yeah, imagine if you're someone like Walk-In or someone that bought like
Oh man,
3600
imagine just being
buy
so underwater that you had to
buy
proposition other
puts.
men on the internet for sexual favors.
I'm almost 100% convinced he's holding 3600s for like June that he bought in December that are just down like 30 or 40% right now.
So the age old adage of DCA in, DCA out, though, I think that still like kind of applies, and like
It
when
does.
when you're seeing sort of statistical anomalies play out, it's as a bear or a bull, you kind of want to sort of consider making at least a small entry into your position that you want, and at least that way you have some exposure. But a lot of people just blow their wads on a single trade or on like 2 or 3 trades, and it's
To be
just
fair, it's not hard to blow your wad on the SPX. For most people, like one contract is 50% of their portfolio.
yeah. Well, yeah, maybe
Even
they
if it's
shouldn't be playing
shitty
something like
and out
that.
of the money.
Maybe they should be playing something like SPY. That's why SPY exists, is for the
Yeah.
poorest to get
I
cheap
think people
fucking
underestimate the
multiple.
value of like with smaller ports of getting things like SPXX and leveraging there, and sure you're not going to make millions, but you'll make something, right?
Yeah.
Like I think that's the biggest problem is everyone always wants to buy the thing that could make, like they want that potential in the position more than they want like the wise and uh well thought out position that may not be
Yeah.
as profitable.
Like if you can't afford at least 2 contracts at the price you want, it really, you shouldn't be playing that unless it's like you're 100% certain thing, because otherwise you're just never going to have the ability to sort of throw at least one of those contracts around to manage your cost basis.
Yeah.
Yeah, it's so much easier to get out 20% up if you can average down when you're 40% down.
Yep.
Yeah, exactly. That's
Yeah,
exactly right. That's what I mean.
I mean, for long dated options, for me, if it's like over 90 DTE, if I'm willing to buy it at the current price, I'm also willing to buy it at 50% less, right? Like that's the only
Yeah.
way I'd enter that position, and especially without a hedge. So you need to be prepared to manage any long term options position has to be managed constantly. Zero DTEs are easy because you buy them, you set a stop, and if it makes you money, it makes you money, right? But like if you're buying 90-day out contracts and you're spending that kind of premium up front, that's a position that you need to focus on. You need to manage. You need to hedge upside moves. You need to hedge unexpected, turnarounds in the market. You need to be able to double down. You need to learn how to take profits from your hedge and use it to average down your longer term position. And the management of that is effectively what will make you a lot of money over time, not when you enter it and how well you enter it. It's how well you manage it.
Yeah, absolutely.
But people are learning. I'm seeing people do better.
Yeah, yeah, no, yeah.
So
It's I think that at least from what I've seen, people are a little more salient of their risk tolerance. Whereas before no one really knew what it meant to risk too much because you just kind of if you have everything in GameStop, and then cash, you don't necessarily understand what your risk profile looks like because it's so messed up.
I mean, everyone says GameStop is so hard, but it's given so many bag holders so many opportunities, right? Like it's very forgiving over long periods of time because it always runs back up, right? Um, but other stocks don't do that, and it only took a year of everything going down for people to stop full porting calls. So I think we're making progress.
It only took a year.
Yep.
I don't think so. Everybody's going to buy calls that open on Monday.
Yeah, you're right.
Yes.
I mean,
It's going up.
I might too.
Yeah,
Like, let's be honest. How many people in this conversation are also doing that?
but I'm not going to do it with like a whole ton of cash. I'm going to use like a teeny tiny bit of my portfolio, look for an entry, and then just see what happens, right? I'm not going to. Oh, God. Just the amount of, I'm not going to buy, I'm not going to full
That's
port
just
into
because your
Rev at
wife.
$8.
Fuck you. That's just because your wife found out about your shares the other day.
That's true.
Yeah, if she hadn't found out, you'd be buying just as many calls as everyone else.
Yeah, it was a weird conversation because I was literally watching GME just absolutely rip face.
You
while I
should have
was
been
just
like, "That's
where-
my delta hedge. I'm making markets."
Yeah, it's good that it's all way up though. That's always reassuring.
Yeah, I bought some weeklies with profit. Like I bought it was a next weekly at the time, like near the money, and it just went super in the money. So I just took like half of that and threw it into weeklies, and I was like, I'm okay with losing half of this. So I it was fine for me. It's house money at this point, and if it prints, then yay,
If this momentum gets really crazy, do you see SPX max going to August top? I think now as SPX approaches 4,100, is it good to position like 20 to 30 DT? 20 to 30, hold on, I missing the rest of this. 20 to 30% slow DCA, the longer puts. Yeah, I mean that's a great way to do it. Right? Don't enter all your fucking puts at once and then the market rips up another 100 points and you feel really stupid for a couple months, right? It's hard to hold positions underwater, and yeah, timing the top is important, but you can ease your decision making by DCAing over time.
Yeah, I mean, again, I mean, this is just almost the worst time to be asking all these questions because so much is going to matter or depend on the rate hike that's coming up.
Yeah,
I
agree.
If it's 0.25, yeah, I could see us hitting 4,200 in the next like 3 or 4 weeks. If it's 0.5, I could see us hitting 3,800 in the next 2 or 3 weeks, right? I mean,
Yeah.
it's gonna really. I mean,
I don't think it's a bad
it-
idea to have some near the money puts to the downside, and probably not a bad idea to have some out of the money calls with theta. Like wide strangles are very decent going into the Fed meeting, because I think either way there will be a lot of price realization no matter which way the Fed leans, and that way you're kind of protected on both sides.
yeah, I mean, it's probably pretty unlikely that we're gonna stay at 40.90 for
Yeah,
3 or 4 weeks.
I
So,
mean, I can agree with that.
What do you
But
think of
I mean,
of
if
a
the
VIX
if the Fed
triangle?
is bullish and we do keep running, remember that looming over everything is the fact that, you know, longs are currently in position. Once we start getting up to like 4,300, like if it does turn out bullish and we start moving up hard, and the bears come back or the bulls come back, and we start to the market trend really starts to shift. You know, those core positions are very, very at risk from declines in earnings into the future. And if BlackRock and Vanguard and all of them think that their positions are worth more now than they will be in a year, they will sell the fuck out of everything.
yeah, I think, yeah, I don't think there's really any scenario where
Yeah,
we go up
I
and
don't think there's a
stay up.
scenario where we're back in a bull market at all.
Yeah, we're not going to go up and stay up. There's another down on the horizon. It's just a matter of where does it start and how long does it last, and then we'll have to wait until that happens to get enough data to figure out the other direction later. But yeah, I mean, we're right at this point where I think there's a lot of short calls just all over the market, just everywhere, that are currently being pressured in a big way. I mean, like we
I think a lot
saw.
of them are underwater right now.
Yeah, well, they're underwater, but probably with the theta, because most of them were entered, in December around between 400 and 4,100, and I was telling people, once we get to like 40.20, 40.50, and start really, pressuring that range, I mean, we're going to start seeing some of that capitulation, and sure enough, I mean, we're seeing a bunch of random call buying everywhere, and at first glance it looks like, oh, people are getting bullish, but I think it's just bears who wanted to capture theta that are getting screwed here.
Want to
But
bet
once
that
that
JPM started selling off their futures on Friday, and they're going to roll Monday?
I have no idea.
I wouldn't be surprised if futures pull down hard into tomorrow morning.
Yeah, perhaps crypto's going up a little bit. That's a little interesting.
Yeah.
But we'll see.
I'll be buying
I
GME
haven't.
weeklies on Monday, but it'll be with house money earned from leveraging more intelligent strategies learned from this stream. Thanks, guys. Thanks, man. Congratulations on your SPX thing.
But yeah, if the SPX pushes over 4,100 and sustains, I think we're gonna start getting real. It'll start getting real fun.
Yeah, squeezy.
Yeah, then it's gonna drop
Squeezy.
then it's just gonna drop like a rock.
Yeah.
Yeah.
I would say if we're over 4,100 and we see like a 500 BPS day, that's a day to buy puts.
Yeah.
Yes. Yes.
Yeah, I think depending on I mean, if the market just enters a complete face melter, I'm just gonna start getting super duper duper bearish.
Yeah.
The harder it runs, the more bearish I'm gonna get, like exponentially, because I don't know. I mean, did you check out that FTX list of creditors, by the way? I mean, I know
Yeah, I
that a
saw
lot
it.
of them are they're not necessarily taking huge positions, but you see names on it. It's like a who's who of government, looks like pension funds from nearly every state. You
Yeah, but I
have,
mean that loss is A, minimal, and B, so dispersed that it's just like I know crypto bros want to believe that crypto is worth something, but it's not. It's like 1/5 the value of Apple. Like all of the cryptos are like half the value of Apple.
And that's nominal, right? There's gonna be
Yeah.
so much slippage that it's probably worth a mere fraction of even that.
Yeah.
so
Crypto's
with
just not that big. It's just not that big of a market. It's
Yeah.
So I'm not super worried about the effects from FTX.
Well, we'll see.
It's
I
interesting to see how
think-
many people risked client money in something so speculative.
Yeah, pension
Yeah.
funds even.
Yeah,
A
I
lot
can't
of
believe pension funds should be
American
buying into fucking crypto or
a
mutual
lot of
funds.
American capital going into a company where a significant amount of the activity that they supported wasn't legal in the US. It's just a strange.
Yeah,
It's weird. I worry about the implications. I mean, it's massive contagion. I mean, even though it's minimal in terms of
what
how
was the size of FTX? How much money was in it?
it was like 13 or 16 billion or something.
Yeah.
It was nothing. People,
yeah,
it's
unless it's
still
just
insane to me how like you look at like Twitter and stuff, or listen to Twitter Spaces, or look at Reddit, and people are still like, "Oh my god, $16 billion!" Like after all this exposure to the market over the last 2 years that retail's had, and people are just still shocked by those numbers. And like
Yeah,
Elon
the
lost
market
100
maker for
billion in
the
like 3 months, like, and he's
the market
still
maker for the
rich as fuck.
SPX is sitting on negative 100 billion right now, just on its hedge.
Yeah, the market makers on SPX are really underwater. Don't forget the weight of that hedge is a significant driving force for more upside.
Actually, it's historically, at least from my voodoo calculations that are not backed by a whole lot. There's a lot of hand waving, but their hedge is actually pretty small right now
Is it 100 billion?
comparatively.
Is that per
Yeah,
percent or per dollar?
it's dollar. So, I
That
mean,
sounds
if
that
you look at
sounds
the
huge.
naive, if you look at the naive decks,
Naive.
it's like whatever. The decks that assumes all puts are bought and all calls are sold.
Yeah.
It would be like negative 1.2 trillion, which is honestly even really low compared to historically. I mean, usually it's more like 1.5 to 1.7 trillion. So yeah, it's pretty low right now.
Hmm.
We'll see. I mean, a lot of that just has to do with people just aren't buying them, right? I mean, it's everyone's just waiting.
I think we're moving into a period. I think provided the Fed doesn't fuck us, we're moving into a period very similar to August.
Yeah, I can see that.
So don't get too bullish too soon, or bearish too soon, or either.
Yeah.
Be like water.
Exactly.
Yeah, momentum is your friend right now, I think.
Yeah.
Short-term momentum is your friend. But anyway, yeah, I mean, yeah, FTX sucks. I mean, it's a good thing it blew up, right? It's gone now, right? The
Yeah.
fraud is
Finance is next.
yeah, that'll be interesting. But I mean, this is a healthy part of
Regulation.
the
Regulation of decentralized things and making them more
well,
centralized.
regulation, but just in general, I mean, I think all of these scams and stuff tend to get caught when money starts getting scarce.
Yeah.
So, I mean, this is a healthy. The market's healing.
Here's
some ways.
the outcome I see for crypto. Centralization.
Yeah.
Yeah, and then crypto's fine, and then just like regular money and not special in any way at all.
Well, that's the only thing regular money is missing is decentralization.
So I'm gonna
right?
buy Solana on the next dip.
We just need to try to figure out which crypto coin the United States government is going to buy.
Their own.
Yeah, you think you're going to make their own?
Yeah, because they want to be able to print it and choose how deflationary it is.
Well, yeah, but if they can take over,
No, gross.
what-
Make your own.
I don't know if they can handle that.
No, they can. They got Gensler.
Yeah. Okay.
And tanks.
Yeah.
Yeah, I don't know.
I don't
But
expect it to be. I don't expect it to be good.
at the same time,
but I
if it's
expect them to make their own,
if it's centralized, why crypto at all?
because you got to destroy debt. We're pumping our debt by raising interest rates. If we're gonna eventually default on that debt, we need another currency. Right? That's some tinfoil shit, but watch it
Yeah,
happen.
that's a little much. We'll see. There's a lot that has to happen between now and that.
Nothing but advantages. There's no downside.
Except for the part where there's no confidence in whatever crypto.
Yeah,
debt.
except for that.
No one has a choice. We just destroyed all the debt. Do they still want money or not? Yeah.
We gotta have it backed by some sort of collateral, like we'll go back to the gold standard.
Back it with missiles and boats and
The
submarines.
gold. Oh god, don't say that. The gold standard is
Only
honestly
because the euro
gold.
oil crypto.
If you want to find something worse than crypto speculation, gold speculation. It's actually worse.
Imagine keeping a bunch of gold. Like, imagine being wealthy and keeping a bunch of gold in a bunker. Just walking around the post-apocalyptic wasteland, lugging bars of gold.
Gold is illiquid
Resorting to
crypto.
beating people in the head with them in order to get food because they're valueless and just shiny rocks.
Yeah, gold is illiquid crypto.
You know, like I think that like gold is a commodity. It's used in some electronics, so like there's like a little.
It's
bit
also
of value
infinitely
there.
recyclable, and we have shitloads
Yeah.
of it.
Yeah, I don't really like it as a commodity, but you listen to all the gold bugs who talk to people, and it's just they're so bearish. Like it's insane.
They
Like
have to
actually
be.
insane.
They've bought too much gold, and the price is stagnant.
Yeah, it's
They,
ridiculous.
yeah, it's literally pet rocks.
Speaking of which, I need to close my silver position.
Oh, did the squeeze happen?
But see, even you
No,
own
it never.
liquid.
Well, like Comex squeeze, but not like real squeeze, right?
Yeah.
It's never a real.
But even your
squeeze.
silver's liquid. You bought an ETF, right?
Yeah. Oh, I'm not gonna buy real silver. What am I gonna do with it? I have a tiny.
Neither is that
apartment.
ETF. But
Oh shit, that was rough.
Still bullish on lithium though.
I'm hoarding uranium for the squeeze. I keep it in the office right next to me at all times.
Nice.
All right. Well,
yeah,
tomorrow's
I don't
gonna
have
be
anything else to
interesting.
talk about.
Let's prepare to be completely wrong and ghost the chat.
Yeah,
Yep.
that'll be fun.
Yeah. All right.
No, what's gonna happen is the stock's gonna go up 10%, and I'm gonna be away from my computer for 3 hours. I'm gonna come back and I'll have 20 messages asking me if it's bullish. That's what's gonna happen.
You should just turn off your DMs.
They at me. It's not even my DMs. They just at me in chat.
I think I can not allow them to do that.
I think I can too, but I secretly I love the attention.
I know you do.
don't care.
That's why I bring you on here.
I love
All
getting,
right.
I love getting to how the tip's looking at on average with every like decently red candle, like 90 basis point down, how the tip's looking. I'm like,
Just tell them to look at the
same.
daily. I put it in there every morning. It's ridiculous the amount of questions I get about it.
Well, yeah, they want like real time, and it's like, dude, this thing goes so slow.
I know. Stocks puts, including SPY. Also, would you please show how to adjust the Vega on Option Strat? I think you need Option Strat Premium to adjust Vega. So you might want to use a different options calculator if you're trying to get into IV positions. Option Strat's easy, but it's not great. All right, guys. Thank you so much for coming on. I appreciate it and talking with me. Everyone else, thank you for tuning in. Have a great rest of your weekend. Pickles Picks will be out tonight around midnight, and then we will we'll see you all tomorrow.
Yep. Happy MOAS, everyone.
Bye, guys. Puts cost stream like shares.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a